A very good evening. You're watching IDFC First Bank Presents Leaders of Tomorrow Season 11. I'm Ritvika Gupta. Today we'll be discussing the big ideas when it comes to investment strategies for 2023, financial literacy for entrepreneurs, and the increasing role of technology when it comes to investment and trading. In the first segment, I'll be chatting with Sonam Srivastava, founder Wright Research, and in the second segment, my colleague Jaya Rai will be in conversation with Hemant Rustagi, CEO of WiseInvest Advisors. Thank you for being with us here, Sonam.
Thanks for having me, Ritika.
So, the theme for this season is Ideas for New India. So, I want to kick this off by asking you, what are some of the ideas or investment strategies, for 2023, which investors need to look out for, especially when they are considering, investing in a volatile market to, for better risk-adjusted returns?
Definitely. So, yeah, like you rightly said that, this year could be a little volatile and there is a slowdown of growth across the world. So in this time, I think, what investors should do is, follow a systematic approach. They should have a dedicated strategy that consistently invests for them. And if you talk about investment strategies, I think investing into the momentum factor, which is the trend following factor, or the value, right?
Yeah.
Value is something that would, I think, dominate a volatile time. Mm-hmm. People will be looking for undervalued companies.
Right.
And I think that would be a good strategy to follow.
Nice. Sonam, at this point, I also want to talk a little bit about your company, Wright Research. Tell me, what was the idea that led to the formation of an advisory firm? How did you have that idea?
Definitely. So I sort of, I've been in the industry for more than 10 years, even before I started. Mm-hmm. And, I always had that entrepreneurial passion to pursue something on my own.
Yeah.
And, when I saw, I had a previous organization shut down before I started, and I saw the market and I saw that nobody was doing quant at scale, and I thought it's a great opportunity for me to do this. I'm really passionate about it, and it gives me a lot of room to experiment and do exciting things. And obviously, when I started, I didn't have that focus on the retail segment, mm-hmm. but when the pandemic happened, we saw the whole growth of retail investing, and we saw that growth come to us as well. Yeah.
Nice. So I also want to understand algorithmic trading. I think it's all about automated buying and selling of stocks. But what, according to you, is the potential of algo trading in India?
Definitely. See, algo trading itself is already very predominant in India. You have more than 50% of trades in the overall market happen through algorithms, mm-hmm. right? And algorithms make our lives easy, right? They're not taking away anything from anybody. They're just adding skill sets to the traders. They're giving you better prices. They're giving you better participation, and they're removing your biases.
Right.
And so it obviously has a lot of scope. And if you compare India to the global market have a much larger penetration of algorithms. So India has a lot of room for growth from here, which is very exciting for us here.
Amazing. I'm also keen to understand how investors are taking to technology and this AI type of environment that we have, because there might be a bit of challenges in terms of adapting to it. They might prefer a human interface. How do you think, in psychological terms, how do you think this will plan out?
Yeah. So talking about this, investors, we have a lot of investors who are coming from tech background, right? The new age of investors. They actually do prefer, technology-driven investing more than the traditional way.
Yeah.
And I think, if you look at the traditional way of investing, people typically, an investor or a manager would come and give their call, right? It is mm-hmm. one person's analysis or, one person's discretion.
Yeah.
But when you follow a AI-driven or a machine learning-driven algorithm, there it's a very transparent thing, right? So I won't say, I like this stock or I found this stock interesting. I would say that these are a number of factors. This is the numbers. It's much more transparent, right? It is much more understandable to the end user, which is, I think, something that a lot of people appreciate. Right? It's not like it's my call. It mm-hmm. is a very well-defined way, which is not at all black box, but very, very transparent.
Right. Then there's also momentum investing that's picking up steam. What advice would you have for investors to really leverage this strategy?
So momentum investing is something again which got a lot of momentum in
Yeah.
in 2021 and the bull market that happened, right? So that was, and we also do momentum investing. We have our largest set of investors who follow that strategy. And yeah, momentum investing is something that works very well in India, right? Because India has gone through these large bull phases, right? So momentum has worked. Plus, India is an emerging nation, so very, very dynamic. Things change very rapidly. So that's why a dynamic strategy like momentum works really well. And it's not a very complicated strategy. See, momentum investing means picking up trends, right? That's it. You have to pick up price trends, and that is something that people can do, through themselves. Try to identify stocks that are seeing growth, and then you have a number of advisors like us who create these strategies for people, and we offer them at a very low cost in a very transparent fashion. So that is also something that people can do.
Right. This month we are also focusing on a lot of women-centric interviews, because of Women's Day. So I wanted to also understand, do you think there is a lack of women entrepreneurs in the fintech sector or India's finance industry? And because it's been, predominantly a male-dominated sector, what is your take on that?
No, definitely. So not just in the fintech industry, but in the broader finance industry, and obviously in the startup space, there is a very less representation of women. And I think that needs to change because on Women's Day we were doing this analysis that women themselves are much better investors because we are risk averse. We tend to think for the long term. We want to safeguard capital, which makes us generate better returns in the long term. So if women were educated and they knew what opportunities are out there, I think they could be excellent investors. And we need to be empowered to make better decisions.
So what would your advice be to the women viewers of our channel in terms of giving them some investment tips?
Definitely. So I would tell women to, that they tend to typically go to safer options like an FD or gold or, not even investing, relying on somebody else. What I would tell them is that, you have a good investing nature because of, your inherent conservativeness and, your long-term vision. So just educate yourself on what opportunities are out there because there's some amazing opportunities out there in the market, right? That's why we are all here.
Yeah.
So if women educate themselves and they use their own inherent nature to invest, I think they will generate much better wealth and they'll contribute to their family's growth and well-being, right?
Finally, as we wrap up this interview, tell me what is the road ahead for Wright Research? What are your expectations from the company in the years to come?
So yeah, we have sort of seen a little bit of growth, right? From where we started 3 years ago, but there's a long way ahead for us. So yeah, we want to continue to grow, our reach to the wider audience. We want to democratize the access to these amazing strategies that typically only the 1% has had access to the greater masses, and enable their wealth creation journey. And yeah, we love working with these quantitative products, machine learning, AI, and data-driven investing. So we want to work and do exciting stuff in that area. We might also go and take this out to larger institutions and high net worth individuals through a PMS. So yeah, a lot of exciting things happening with Wright Research.
Amazing. Well, that was really insightful. Thank you so much, Sonam.
Thanks a lot for having me.
And on that note, it's time for a quick break here. We'll be back shortly. Stay tuned. Welcome back. You're watching IDFC First Bank Presents Leaders of Tomorrow Season 11. In this segment, my colleague Jaya Rai will be speaking to Hemant Rustagi, CEO of WiseInvest Advisors, about financial literacy for entrepreneurs. Take a look.
In this special interaction, we are going to focus about financial literacy and how important it is for entrepreneurs to manage their personal finances. And for this, we have Mr. Hemant Rustagi, CEO of WiseInvest Private Limited. Hi sir, thank you so much for giving our time to us. And I would like to start with financial literacy, that how important it is for entrepreneurs and why is it necessary for them to consider this beyond their entrepreneurial ventures.
Well, I would say that, financial literacy, like everybody else, is very, very important for entrepreneurs. The reason being that they have to manage their business finance as well as their personal finance.
Right.
So when we talk about business finance, obviously the focus is always on managing cash flow. On the personal finance is completely different. You have your investment goals. You need to understand the risks that are associated with different options, because on the business side, while you're focusing on the cash flow, you're aware of what the challenges are.
Right.
But this is being completely new field. Entrepreneurs have to really focus on understanding the pros and cons of every investment option.
Right.
How can they achieve their investment goals? So I think it's absolutely important. If you have the financial literacy, it makes all these challenging things much easier for you to tackle.
Right, sir. So entrepreneurs work really hard to grow their businesses, but then they often forget to look at their finances. So what are the things that you think that they make mistakes when it comes to investments and their own finances?
Well, I think this is a very important question. What we have seen is, as an entrepreneur, your focus is completely on ensuring
Right.
that there is enough resources available for the business. So at times, you kind of ignore personal finance bit. So look, there are a couple of stages that your business goes through.
Right.
You are a startup, and then the stage comes where you're trying to grow something, and then third stage comes where you're already established. Now, I know that the initial stage when you're a startup is very difficult for you to separate your finances from the business finances, because many a times you're using your own credit cards.
Right.
Okay, so it's very difficult. But I think you should always have it at the back of your mind that at some stage you need to separate this. Then the stage comes when you start growing. If you allow this to continue for even longer, okay, you will see a lot of difficulties in terms of finances, because the business demands a lot of finances, your personal life also demands a lot of finances. The third stage is when your business is doing very well. What we have seen is many entrepreneurs, what they do is saying, okay, now that the business is doing very well, we don't have to worry about the money because it will be available whenever I need the money. Well, I think all these three stages you need to be very careful. Like I said, initially it's very difficult to separate these two, but once you reach a stage where the business starts growing, you need to start separating these two.
Right.
So the mistake many entrepreneurs make is that they continue with that, thinking that, I'll have enough money once the business is established. I don't have to segregate these two. But I think sooner you do it, the better it is.
So the first step to solid investment, solid personal finance is budgeting. But entrepreneurs generally has different amounts that they get in. They don't have a solid particular income source basically. So how can they resolve that and look for investments?
Well, I think this is a very challenging situation. I understand. Look, what happens is when we talk about having an investment plan, what are we talking about? We're talking about keeping some money aside.
Right.
Okay. So the difference is, earlier days, what used to happen, you would spend money and whatever is left, you save. Things have changed. It has to be saving first and investment later on. But the difference is, if you compare, the financial situation of entrepreneurs with a salaried person, the salaried person is sure of the cash flow.
Right.
Here, as you rightly mentioned, the cash flow can be erratic. So I think there are two important aspects. While the planning aspect will remain the way it is, we talked about creating an emergency reserve. Okay, so I think you need to be a little more focused on that. Create a pool that in the months that if your cash flow is erratic, your investment process should continue uninterruptedly. So the pool that you have created of emergency fund, or you can name it whatever you want, will help you to ensure that investment process continues. But budgeting plays a very important role. I think it's absolutely important for two important factors. One, you know how much you have committed for investment. You know where it's going to come from. The second important aspect for me is that when you do budgeting, you can involve your family people.
Right.
Now what happens is your spouse, your children, they also understand what are the cash flows. Sometimes what happens, the family can be demanding certain things without realizing
Right.
how difficult the situation is. Or your kids who are small, right? If you want them to be responsible financially, catch them young, as they say, right? Involve them in this process. So I think budgeting is absolutely important. Create a budget, stick to it, and this will ensure that your investment process continues uninterruptedly.
Right. So what if the entrepreneur do not have any investments or anything towards their personal finance, but they want to start it? So what is that thing that you think should be considered first in terms of managing or having their personal finance?
There is a process that you need to follow. Okay, you need to have an investment plan in place. Now, when are we talking about investment plan? You are, as an entrepreneur, you are used to building business plans.
Right.
So similar, you make an investment plan wherein you establish your goals, the goals that you may have to achieve in the short term, medium term, long term. Then look at what your asset allocation should be. Now this may sound a little intimidating, but the fact is that once you start the process, it becomes much easier for you, because like everything else that we do in life, unless you plan your investment,
right,
you are not going to be a successful investor. But important point is, before you even invest, your focus has to be on risk management.
right,
And the reason for that is, so when I'm talking about risk management, what is that I'm talking about? I'm talking about health insurance, I'm talking about life insurance, I'm talking about creating an emergency fund, which is essential for your business as well as for your personal finance. Now what happens is, you are whole and soul of your business. If your health is getting affected, the business will get affected, and we know that one visit to the hospital means you are spending lakhs of rupees, your finances will go haywire. Life insurance is absolutely important because you have your family who are totally dependent on you, maybe financially. So if something were to happen, some unfortunate event were to happen, the business won't be there, the money won't be there.
correct,
Okay, and the third, like I said, creating an emergency reserve is absolutely important, because the last thing you want to do or worry about as an entrepreneur is that you're worrying about how my business is going to run for the next 3 months, 4 months, how my investments are going to run, or how my personal finances are going to run for the 3 or 4 months. So I think begin with risk management. The next step should be have an investment plan in place, and if you find it overwhelming, okay, there's no harm that you sit with an advisor, understand.
correct,
But if you have an advisor, don't just look other way. Okay, be a part of that investment process so that you learn over a period of time, and then maybe take charge of your personal finances at some stage.
a lot of people has been now moving to mutual funds in terms of investments. So what is that thing that one needs to start investing in mutual funds? Can you throw some light on that?
Yes. Look, as I mentioned earlier, potentially they are the best. They provide you liquidity. They are professional fund managers. They have everything that you require from an investment option. But it's equally important for you to make the right choices. Now what happens is, many times you look at the market mood. If the markets are not doing well, all your money goes into debt. If the markets are doing very well, okay, there is exuberance all around, then you go and invest all your money into equity, and then it takes you beyond your risk-taking capacity.
Correct.
So important thing is to understand that mutual funds are market-linked product, which means whatever happens in the debt market, whatever happens in the equity market, that will have impact on your portfolio. So make choices based on your own risk profile. Understand that volatility is a natural phenomenon. You have to deal with it. How do you deal with it? You deal with it by following a disciplined investment process. For example, that's why we always say that invest through SIP. So even for entrepreneurs, investing through SIPs is a great thing. It can be challenging though at times, because you may not have those kind of cash inflows. But I think that's nothing beats a systematic or a disciplined approach of investing. So as long as you make the right choices, suitability is important.
Right.
Never get carried away by what's happening in the market. Suitability is important. Be a disciplined investor. Trust me, mutual funds can do everything possible.
We have a theme of idea for New India that we follow in this season. So what is that idea according to you that every entrepreneur of India should have in terms of investments?
Well, let me begin by saying that as entrepreneurs, you are contributing a lot to the growth of this country. Have the same vision, have the same thought process for the financial future of your own family members. That's very, very important, because that's one aspect which gets neglected. Second aspect is that you have the temperament. Okay, I talked about using equity for wealth creation. But as an entrepreneur, you have the temperament. You understand the nuances of investing in equity, because you yourself are a promoter. You know that there are going to be ups and downs in the businesses. So I think as an entrepreneur, you are the best person to benefit from equity. So look beyond traditional options, include equity in your portfolio, and stick around with that. Have a long-term view, because as I mentioned, okay, you can actually do wonders to your portfolio if you adopt equity in your portfolio. So I think look at opportunities which are available, look beyond traditional options. I think you can achieve a lot.
Thank you so much, sir, for your wonderful insights. Hope this will motivate our entrepreneurs and they would start investing.
Thank you so much. Thank you for having me.
With that, it's a wrap on this episode of IDFC First Bank Presents Leaders of Tomorrow Season 11. We hope you enjoyed the conversations. Thank you and goodbye.